to the Pulver Report. It is 9 o'clock on April 1st, kicking off a new month, kicking off a new quarter. Let's get started for today's trading. Let's dive into the charts. We know there's risk in trading. Please always use trade capital only. You know the deal there. We have the SPY looking at around $1 upside, 524. Let's take a look at the futures market this morning. We've got some calendar news. We still have a Euro holiday for Easter extending into Monday. We have ISM numbers, the manufacturing PMI coming out today for the U.S. at 10 a.m. Eastern time. JOLTS job openings for the U.S. on Tuesday. ADP is the precursor to non-farm on Wednesday, as well as services PMI. Powell speaks. Stanford Business Government Society Forum. Thumbs up. He spoke on Friday as well. We also had PCE data that the market digested last week on Friday when the U.S. equities markets were closed. PCE came in as expected, 0.3%, with a slight revision upwards from last month's 0.4 to 0.5. And we have a double whammy on, we have a Switzerland CPI month over month. We have unemployment claims on Thursday, and then we have a double whammy of employment news on Friday, CAD and dollar. So Canada and U.S. reporting news. Here's our forecast, 205 expected, 3.9. Curious to see if we maintain that sub 4% or if we start to print 4% or greater on employment, which would certainly be reflecting a bit of a softening labor market if that's the case. Want to look at a couple things historically and seasonality wise. This is the month-to-month on the Dow Jones. So looking at the 10-year average, April is a fractional performance that's positive. So the last 10 years, 0.18% on the Dow, 0.24% the last 5 years. And then we've been off to a pretty good start on the Dow thus far. Let's go into the SPY, S&P 500. 2.2 to 3.73 to 2.23 April, expected to be April, May, June. As far as last 10 years, positive months expected, which we could still have, a bit of a correction pullback coming. Just watching to see if we have any technicals obeying on the charts. So we've had quite the melt up. We only have one indecision candle, 3 briefly, barely red candles out of the last 21 weeks, starting here. So we're 21 weeks into this run from late October, early November, all the way to present, 21 bars, and we've had, 17 of 21 bullish. Even last week finished bullish. Now this is a weekly time frame, and the week was pretty small. You go to the open, high, low, close, the low at 518, the high at 524. That's a $6 candle. We expect to see, an average about a $10 to $11 candle on the SPY. Same thing on the NASDAQ last week, very quiet. In fact, is that accurate? If that is, yep, that was last week's candle. The NASDAQ went absolutely nowhere. I think, I'd hate to see a quiet week on the NASDAQ, but I think if I go out a couple of weeks, we'll talk about this more in Equities on Demand, but I'm looking for a somewhat of a neutral position where I can take a trade if the market wants to stretch higher, stretch lower. We can take a look at that. I'll probably build that right around this 440. The market's going to open up about $1 higher, so something around 445, maybe a 446 by 445, and build it out somewhat similar to this. Let me get up my options platform right here, and I'll float down the profile, the risk profile. All right, so something like this, and build this out on the QQQ. 2, 3, 4. If I buy, sell. Expiration would be on the 5th. And if let's see, we're looking like we're opening up right around 445. So I'll look at this first, and then I would sell against that Probably something on the expected move around $12. So 445 to a 57, and then a 444 on the put side, and then $12 from there would be 432, 432 put, something like that. Let's see. I could possibly stretch that a little bit more. April 5th is this Friday. Let me see. If I did, or if I sell. No, I don't. I was going to say I could make the mill spot a little bit smaller, but what's the move that I need? I'm not getting a price yet, so it's hard to judge what my weak spot is. 450 to 438, so a $5 or $6 move. I mean, if that's accurate, but again, we'll see. So anyway, once the opening bell hits, I'll kind of price this out. Okay. All right. Let's say good morning, everybody. Ian, good morning. Angela, good morning. Jacob, good morning. David, Don, Chris, Jan, LG, and good morning. Happy Monday. Hope everyone enjoyed the weekend. We had some solid basketball action this weekend for some March Madness. Okay. Q's pre-market up about $1 and change. Dow pre-market up around 20 cents. Let's look at the futures dashboard here. Futures declining. So Dow Jones futures flat at the open. S&P futures still clinging to a positive gain, but dropping hard. NASDAQ futures drifting lower. Gold, 22.72. We'll take a look at that. Silver, 25.23. We're watching that big level at $26 to see if we get a breakout. Hopefully have some good confirmation to the upside. Oil continues to push a little bit higher into 83s. And we'll go from there. Okay. So I do have an expiration on the DIA. That's out to the 12th. So I'm going to look at something. Let me get this one added on the charts. So DIA out to the 12th, it's a 394. Oops. Just need a text box. 412. Expiration 394 by 402.50. And a 393 by 382.50. That was a 519 debit. All right. So look at a fresh position on the QQQ today. Possibly, I'll see the price difference between this week and next week, just to give myself a little bit more time in case this week is just letting the market kind of digest and get some traction for a new quarter. Hopefully we come out with a bit more decision, but this high, this low, we could see some inside candle trading where the market doesn't really make a move until later this month or into May. Again, going back to that seasonality report, take a look at the last 5 years. So I have a slightly. So May is expected to be essentially a flat month. There's a saying, sell and make go away. What I'm showing here on the Edge Finder tool, May is a 1.31% performance the last 10 years. Last 5 years, 1.06. So we'll see. All right, NC State. Yeah, that was a big game. High percentage buckets for the Wolfpack. It was a good game. Yeah, there's a lot of good basketball. NC State's riding high and a bunch of momentum. Haven't they won like 8 or 9 games in a row? like through the conference tournament all the way into now they're in the Elite Eight, so, or no, Final Four, right? Yeah, yeah, everyone's punching the tickets to the Final Four. Exciting stuff. Okay, so indecision candles possibly. If we have some inside candles on the Qs. Take a look at the SPY. SPY is trying to nudge up a little bit higher. We did barely eke out all-time highs again last week. Here is that nudge. Here's a 15-minute time frame. It looks like you could barely acknowledge all-time highs, but it is technically right there. So that previous high to that high, that was a just barely all-time high. Again, zoom out a little bit. Here's the 60-minute chart, and as bearish as traders think or want to be, I wouldn't really be super bearish until we start to see lows getting broken. I mean, one thing I think everyone's like, oh, I'd love to see a correction. I was in the same camp, but what we might see instead is it fails to break highs, or it just barely ekes out these slightly higher highs, and I don't know, we might go into some lower volatility. So today, especially, I mean, I might look at trying to grab some premium out of I don't know if I'm going to do a strangle this morning, or just let kind of price fall into place. Look at 10 a.m. 10:30, and see if I can get an iron condor or something going, and just maybe grab 50 cents to $1. Depends on what instrument I trade, but hopefully something pretty simple. And I just don't think there's a reason to force a sell trade. So I'll be watching on the 5-minute time frame. Gamma levels I'm looking at here, pre-market contracts 525. We closed last week right around that 523 mark, and we're looking at gap higher. So if we gap higher by about $1, it's going to be right in here. We push up into 525. Okay, fine. I mean, is it a melt up day? Monday's usually not a trend day. Monday's usually pretty quiet. So if we gap higher, push to all-time highs, I might look at taking a it's not bearish necessarily, but even doing a slightly out of the money bear call spread to grab some premium, like I said. So I will watch and see how price kind of plays out from this dollar gap to the upside. All right. So that is that. Let's go through the benchmarks and the instruments we usually take a look at. Dollar index. I mean, it looks more bullish than it does anything else to me. It's been a choppy index. It's been kind of difficult to read because we've had such sharp moves, as you can see with the kind of red placed in between here. This was, I don't remember if that was FOMC or post FOMC, and then just followed by a big engulfing candle. To me, this looks, on the backside of this trend line, looks more bullish than anything else. So how bullish? I mean, enough so that we could drift up into 105.50 or so. And if we get into broadening pattern levels, then dollar could look like a better performer compared to its peers, 105.50 all the way up to 107. And I would consider, if I'm going to get short the dollar, I'd like to see this all the way up to 107 or even 108 before I consider getting short on the dollar. We're going to see some central bank drama happening this year because banks are finally coming off of the higher interest rates, and we're starting to see signs of central banks flinching, where some are cutting rates sooner than others. The anticipated anticipated rate cut for the Fed is going to be June. Some are saying 3 cuts are expected this year. They might disappoint, go to 1 cut this year. We don't know. And again, you can look at what tool is correct. This tool's 99% accurate since 2009. It obviously prices things in, like even up to the last minute. But for that month of April, zero information from the Fed. Going into May, it's May 1st. And the expectation is another pause at 92.7%. June, probably 60+%. If I go to June, yep, 60% expected to cut. 35% expected to pause. As the month of April kicks off and unfolds, let's see if this shifts higher and this shifts lower. Because if we go into like a 50-50 decision for June, that could certainly rattle the markets a little bit coming into, trading in May, right? So as it stands right now, no cut for May, the cut expected for June, and then the next cut would be September and then November. So 1, 2, 3. That's the way the market's looking at pricing it in right now, but it could all change. So watching mainly to see how this month unfolds, if the Fed has to do anything as far as changing their stance on pausing or cutting. Okay, so dollar index, we're good there. Let's go oil, gold, silver. Oil 83.20 at the top of this channel. As long as we stay, to me, above, I'd say above 78 right now. As long as we stay above 78, oil still looks bullish. Probably creeping up into 90. I'd say 90 to 92. I look for some heavy resistance up there. This has been a very obedient channel, which we've mentioned the last couple months. And if it starts to get a little bit more aggressive, that wouldn't surprise me. But as we come into highs, kind of like this final push here, come into highs, maybe reach some overbought conditions, and then I start looking for resistance around that 90 handle. Okay, but I'm bullish on oil for right now. Gold and silver, one of the more exciting trades this year. Gold at 22.56, and first measure move around 22.70. Oh boy, let me see where GLD's at. GLD at 208.93. I think I might look at taking some profit here. I have a 190 call. I'm going to see what this is trading for. 190 call and 208.93. So that's an 18.93 credit. Just real value on my option trade should be worth over 11 bucks. Let me check my break even here. So if I go to GLD, I've got a break even around 726. Uh, 730, 726. Bull put spread 722. Yeah. So let's just say 730. Oops. 1893 minus 7.30. So I'm up 1163. 1163 out of a 730 debit. That's up 159%. I don't know. I think as we get into, the daily chart doesn't show overbought conditions or anything, not yet, but I'll double check a couple of things. Anything here? So the weekly time frame almost hitting overbought conditions. The daily time frame, I'm surprised that it hasn't. Yeah, we're probably going to print some divergence here this week on gold. Doesn't mean that we can't blow the top off a little bit higher, but I'm a little concerned that this level, it's close, but that slight hidden bearish divergence, I might be looking to take some profit. So that's probably in my best interest just to book that profit for GLD and then try to reestablish a position on a pullback. We go back to this chart here. I do have a sell call at 210, so I'm not quite there yet, which means it's not necessarily threatening my position. This should be mostly profit, and I believe the expiration that I sold against it was April 19th, but let me confirm that right here. All right. Morning, Donna. Morning, Ron. Morning, Keith. Where is my, there it is. Okay. Just give me a moment to get logged in. Okay. So trades to manage. I have a lot of stocks I want to take a look at this week as well. Okay. Come on, platform. There we go. All right. So GLD right in here. So I have the 190 by 210s. Credit spread 193 by 192. Credit spread is 186.50 by 185.50. So some decent chunks rolling in, up about 3,100 bucks. And then when opening bell kicks in, this should go a little bit higher, based on that read on GLD and gapping up to 208. So these positions, they're not quite there, but my 190s, some nice value on those. Those are all in the money. And then my bull put spreads out to April. Those should expire worthless with full profit on the credit collected initially. So all in all, pretty good chunk of profit. Probability of profit now finishing out of the money is 99%, which is good. So anyway, GLD is looking good. I think it's probably in my best interest to be protecting the profits, looking to reestablish, looking to see if we have a dip or a pullback. Okay. So that'll be kind of an opening bell priority in the next 8 minutes or so. And then also looking at some QQQs and trying to see if I can establish a kind of neutral position going into this week or next week, depending on how much it costs. It's going to be a little bit more expensive if I go out to the 12th, but I'd feel a little bit more comfortable that if this week the market's a little bit quiet. I mean, the Qs look very sideways to me from this high, this low. Qs look like they're more, I don't know. I mean, and this is not, I mean, sideways, and this is like a big candle range, right? I mean, 449 to 432, that's a $17 area. So even if it was a neutral position, if we break all-time highs, it should be enough to pay. If we threaten the lows, then that should be enough to get plenty of profit. That's going to be like $12 to the downside. So as long as my debit's, $7, $6 or $7, willing to take that trade. So anyway, that's Qs. We did the dollar, we did oil. Looking at gold, that's where I said I'd probably need to take some profit. This also was a measured move out to gold. 2272 was my halfway point. So if we took this high to low move, that's the halfway point. That's the full measured move, which means, look, I could do nothing and just want to see this stay directionally bullish. But I will say this on a call option, especially. If I have a call option running and all of a sudden we see a dip on gold, my call option is going to be sacrificing some profit. So it's better to me if I were to look at some pullbacks and then establish some maybe out of the money credit spreads, maybe look to get long again, but still we'll figure it out. So I think I'm just going to take some profit and be safe. Silver 26 remains that big level. Silver starting to catch up a little bit here in performance. Let's see if we can break above 26 and start to shine to the upside. And silver, I'd be watching for a breakthrough towards 29 to 30. I've already measured silver up to 35, and then a fifth wave move all the way up towards 48. Bitcoin, 69,721. Let's see if we have some pullbacks. This was a fifth wave move that I measured the last couple of weeks. We talked about this in session. So if this is wave 1, 2, 3, 4, 5, looking to see if we have an ABC correction pulling back into, I keep saying 60 to 50. 60K to 50K, that's my window to start looking to buy some dips. So if we struggle to break the highs, we have some volatility lows. If it makes a slightly lower low, that's that 60 to 50K area. Previous highs right there. Low 50s would be great. If I'm looking to buy more, and all of a sudden we're speculating that Bitcoin's going to be at 95K or 100K, I'd like to buy it as low as possible, obviously. Okay. All right, there's that. And it's making sure everything else looks good. Okay, so any currency pairs? Let's take a look here. So I'll do a quick rundown of some currencies. My directions haven't changed too much outside of maybe having some dollar strength continuing. This week's with news, we have some U.S. We have the services and manufacturing PMI. We have ADP non-farm, so ADP on Wednesday, non-farm on Friday. We have jobless claims on Thursday. See if the unemployment rate, stays at 3.9, sub 4%, or we start to tick up to 4%. We'll find out. Anything on the bonds? Still inverted. We know that. The 3-month hasn't really changed much. 3-month is still sitting up here at 5.36%. The amount of short-term treasuries has been just off the charts. 2-year yield at 4.63, and the 10-year at 4.28. So 0.4% inversion still happening. 10-year rates, 5% seems to be the line in the sand. If this just slowly works its way higher, we'll see if the 10-year starts to gain traction against the 2-year. TLT 93.30, that's down about $1.30. Looks like we might have some yields trickling higher if the bonds are going to drop. I do like this kind of longer term with this low in place, but watching to see how this plays out. There could be a lot of choppiness here on the 20-year bond. This is the actual bond ETF, TLT. But longer term, as long as we don't take out this low, I mean, I think long TLT is not a bad play either. Okay, currency-wise, just run through alphabetically. Aussie CAD, I'm still bullish on Aussie CAD. Looking to see if this is a head and shoulders pattern right here. Left shoulder, head to neckline, right shoulder. If we can make our way up to 9,000 plus, measure that move, get back to 94.95, profit target there. Aussie Swiss, everything against the Swiss has still remained long. So there's my Aussie CAD, Aussie Swiss. I already have this one. We kind of rounded out this triple support, breaking these recent highs, which is a nice sign. Hopefully we just have higher highs and higher lows coming. Yen crosses, I still think the carry trade is alive and well, so I'm looking to kind of buy dips against the yen. Aussie New Zealand 109. We did take a buy position here. We bought this thing around 108.60, and we're up about 50 pips. And I think that we're in the right spot. So I'd be very disappointed if we had a fake out here and then a fake out here. So part of me is I'm positioned bullish because we took out these highs. With this support holding, the recent run we had was a bullish trade. So this was a high. Market pulled back and then formed this big indecision candle, or this big indecision area. So if we start to drift higher, high point of that range is around 1.11. High point up here is around 1.14. So I'm bullish on the Aussie New Zealand. When this pair does decide to move, it does trend pretty well. So let's see how high it goes. But I'm currently bullish at 108.60. Aussie dollar doesn't quite look like it has the thrust to the downside yet, but watching closely to see if we have some confirmation below that level and see if the dollar strength prevails. CAD Swiss holding long, buying dips. That's it. Very simple. Very simple on that one. Donna says the November FOMC date, U.S. election day. Oh, yeah. That'll be, around the election, stuff's going to get wild. So I'm going to put a pin in that for right now because I think there's going to be a lot more drama heading into the election. I don't know. I think it's just getting started. I'm not really following anything outside of if you're left to choose between a turd sandwich and a turd sandwich, then, cast your vote. So doesn't mean don't vote, just means, how have we not learned as a country anything better than what we had in 2016 or 2020? Yeah, it's just a repeat of 2020. So it gets my seal of approval, 2 thumbs down. But you got to vote. So, all right. Anyway, CAD Swiss, I'm bullish. CAD Yen didn't break the lows. If I was going to be a bear, I'd have to get below 108.80. Hasn't happened, so I still like buying the dips. Swiss Yen is cooperating. We're short at 169 with a break even at 169, so there's no risk on this trade. Hopefully, it just cooperates to the downside. This could be a fantastic trade if it challenges this level. I don't want to see it bounce off a trend line like that. I'd like to see it actually breach and test this low if possible. So I'll be watching this one, but again, break even on the Swiss Yen that we shorted. Euro Aussie, this is going to be a good indication of whether we have risk on, risk off trading. This high, this low, no trade on it right now, but if we break above here, that's risk off. We break below here, that's risk on. It could go either way. So I'd stay out of the range right now and waiting for a breakout. I'll make this one really simple. We'll talk about some more in Flex tomorrow. Right in here. So just kind of watching that support resistance region on the Euro Aussie. Euro CAD Swiss is cooperated to the upside. Euro CAD cooperated to the downside. I said that correlation is what we want to see, and it's starting to do its thing. So if traders were waiting for the breakout, you're getting it to the downside right now. You'd be short Euro CAD, looking for a bear flag, more to come. I would like to see this go all the way down towards 140. 140 is kind of untested, but we do have a lot of support down here at the 143 and 142 area. So if you want to hold this a little bit shorter, I could see this pattern, high to low, a little bit of a wave structure, for a flat pattern, and then heading down. So if CAD Swiss heads up, that's the pair that I'm in. Euro CAD heads down. That's the typical correlation. Euro Swiss pullback was nice. I'm buying dips. Euro pound still inside a chop suey range. Euro yen, so looking to see if the trend line support holds and buy the dip. Bears would have to take out the trend line and take out a low for me to get bearish all of a sudden. So probably look for the trend line break and the push higher if the yen's going to stay weaker. If the Nikkei is going to go higher, the yen's going to get weaker most likely. Euro New Zealand. Aussie New Zealand is performing to the upside. It's outperforming. Euro Aussie sideways. You can see Euro New Zealand is not. Euro New Zealand is doing better to the upside. I like pushing this one higher into these levels. So we've got some sideways movement here, but I'm looking for more upside. Any dips would be fine. Looking to buy some dips on the Euro New Zealand. Hopefully a master flex setup where we get a pullback into red to green transition, stay bullish. Euro dollar looking better. It's the dollar index is essentially what we're trading on this one. We're right in the middle of all this chop though, so I don't love the spot, but I could see with this little bit stronger dollar, Euro dollar comes into 105, 104. From that level, way more interest in looking to buy. So I'd favor slight bearishness on the Euro dollar at the moment. Pound Aussie, very choppy. Actually, that's a swing trade. I'm still in that swing trade. If we get a pullback towards 1.90, 1.89. Pound CAD. We had a fake out to the upside. I want to see if this breaks lower. We've been waiting for this trade for a while. There's a yearly pivot at 167. This resistance seems to be doing its part. So a little bit more confirmation on the right-hand side of the trend line. Pound CAD looks good to the downside. Pound Swiss, I'm still bullish. Pound Yen, I'd stay out of that one. Pound New Zealand dips and pullbacks, I'm looking to buy. Pound dollar is probably the choppiest crap of the dollar crosses. We were fake out, back to the lows. I'm just going to stay out of it for right now. New Zealand CAD, big pullback, but there's two levels I'd still buy this one. I'd still buy it at 8,000, and I'd still buy it down here at 76. I still like this one on the right-hand side of the trend line. Looking to see if we can retest these highs around 8750 to 8800. New Zealand Swiss, still looking to buy and hold longer term for some carry. If we get back up and break this high, like long. New Zealand Yen, vulnerable, but watch this trend line. If we have a fake out, we go from red candles to green very quickly. Possibly buy the dip and see if we can break some fresh highs. That'd be on a weaker yen. New Zealand dollar, I am short. Hyper trend is short to the downside. We had a breakout below the 6 to 60.50 area, and we're at. So we'll see if this wants to come back and retest 5,800. Dollar CAD, extremely choppy right now. Tough one to trade unless you're high or low, which we're not. So in the middle, I'm staying out. Dollar Swiss, we have overbought conditions. I'm going to see if we can push a little bit higher into 92, 92.50 before I take some profit on this one. I'll watch that for the portfolio builder course. And then dollar yen. If we break above 152, be on the lookout for that breakout. 152 breakout, who knows where we're going? We could push up to 155. We could push up to 160. The carry trade remains alive and well. So that's my currency outlook. Okay, so it's opening bell. Let me take a look at something really quickly on that GLD position. So right now, got a few more bucks of profit. I'm going to start grabbing some profits here. So GLD, the bull put spread can do its thing. This one I'm just going to take profit. Let me see what this is trading for right now. So if I look to close this position, I've got a max profit of 20 bucks. It's trading at 1737, 38. Let me see where GLD is at this morning. Trading at 208.57. I'm just going to be safe. I'm just going to take the profit. 1737, see if I can close it. Filled at 1737. All right, I'm just going to take some profit here. GLD, bull put spread looks good. 1740, 1738. Filled there. Okay. GLD, you've got the miners bull put spread there looking good. Okay. GLD position. Bull put spread. Bull put spread. And looking to close 1734. Filled at 1734. 1736. Fill at 36. Okay, and those two accounts have no GLD exposure. So let me double check that. GLD, nope. GLD, nope. Okay, so booking some profit there. That's nice. What was the low end? 1734, I think, was my low. 1738. 1738. So that's a 1737, 1736, 1734, 1736, and then no exposure on GLD here. These two accounts just had later start, so I didn't get in there. But okay, taking the profit, calling it a day for a GLD, and then I've got bull put spreads that'll still be profitable, which is totally fine. I'll let those finish with full profit at expiration, and then I've got plenty of stocks to take a look at this morning. So, all right, I'm going to. What's up with this? Yes. Okay, I'm going to look at the QQQ really quickly. I'm going to wrap things up here in a couple minutes. I will be back at 10 o'clock if you want to come back and join me for another session. I'll return at 10 a.m. Eastern time with Pulver report / A1 trading. You're welcome to come back in for a little update. I'm looking to see if I can get a. So here's my SPY on the 5-minute chart. I might do. We'll see. I might look at an expected move. As long as I have current price is 524. If I'm doing I don't think I'm going to get much premium for it, but if I did a 520, 8 to the upside, let me see here. Look at the SPY. So if I did an expiration for today, expected move $1.20, we should see. I mean, the ATR is like almost $4. So if I sell, this is what's garbage sometimes. I mean, the premium environment is just not great. I mean, if I sell a 528 and I sell a 520, I mean, I get 8 cents credit today to do a strangle. So SPYs, that's terrible. If I did the SPX, we're trading around current price is 52.60. So, 30, 40 points in the day. Could I get something here for the 5,300? Sure. So if I sell the 53 and I sell the 52.20, you get 65 cents, but I can't do a strangle on the SPX. It's just way too expensive. So I could do this and do an iron condor, but even that is just garbage, man. 15 cents. So, I mean, I could tighten it up, but safest play is going to be out of the way. If we have a 30, 40 point move, expect to see a range. Markets have been extremely quiet the last couple of trading days. So, I don't know. Maybe I might do like that straddle swap. Let me see what that looks like on the SPY. Clear this out. So if I did an at the money today, we're at 524. So if I sell the 524 call, that's at least slightly in the money. If I sell the 525 put, I get 208 for that. And then I go out 30 days. Let me see what that looks like if I buy 30 days. Here's 29. Go out 30 days, buy the 20 deltas. So buy the 539. and buy the 510. So it cost me $1.60. I'm going to go back to today. So it cost me $1.60. But if we stayed somewhat in this tight range on the day, where did that other chart go? Right here. So if I pay $1.60, I don't know. It's a tough trade, because if we drift up to 525, if anything breaks this low, I don't know. It's just clearly right now, like 0 DTE, the liquidity, the liquidity is there. It's just the premiums are just not great. We're in a low volatility environment. You can tell that by the VIX being at 13. Right, VIX is at 1366. I mean, anything 10 to 15 is considered low IV, low implied volatility, low volatility. And as a seller, it's a little bit difficult, especially 0 DTE. So maybe the better trade is just the 45-day strangle or something. Anyway, I'll figure it out. I want to close out GLD. I did. Now I think I'm going to take a look at that neutral position on the Qs. 447. We're already off to a bit of a start to the upside. How big of a candle do we get? We'll find out. So let me do this. Let me wrap up trading here. Just give me a couple minutes to myself. We'll come back at 10 o'clock. I'll join the A1 trading team. I'll just stream from my channel, youtube.com/Chris Pulver. So 10 a.m. youtube.com/Chris Pulver. We'll be right back. All right. And I'll look at if I get a position on for the QQQ, I'll share that at the 10 o'clock session. And just got a couple other things I need to check off the to-do list for today. All right, I'll see you in about 18 minutes. All right, thanks.